Shiba Inu plunges over 11% after its Shiba Inu bridge was exploited. What does this mean for Shiba holders moving forward? And Ethereum whales quietly pulled nearly $200 million off of exchanges, signaling a massive vote of confidence during uncertain times. Welcome to the Daily Blockhead, where I cover daily crypto news, trending coins, market shifts, and the global events shaping today's crypto. Now, let's jump right into it. First up, Shiba Inu plunges over 11% from last week highs. Shiba Inu fell from its monthly highs after market conditions and a security incident changed investor sentiment. The drop from this level followed an attack on the Shiba Inu bridge, which saw the protocol lose $2.4 million. The attacker took out a flash loan to borrow 4.6 million BONE, enabling the attacker to gain control of 10 of 12 Shiba Inu validators. With this control, the attacker drained assets from the bridge. There is a silver lining here. Because the attack targeted BONE, the tokens are subject to an unstaking delay. That delay gave developers just enough time to freeze the attacker's position before a full exit, effectively locking them out from cashing out or holding on to control. Honestly, that's one of the underrated strengths of proof-of-stake systems. Built-in mechanics like staking periods can buy developers critical time in emergencies. In this case, it may have prevented an even bigger disaster. According to the Shiba Inu team, the exploit does not technically constitute a hack. The team said the attacker did not compromise the protocol itself. Instead, the attacker used stolen validator keys to gain access to the funds. The bigger picture to all of this is Shiba Inu was designed to be the backbone of the SHIB ecosystem, lowering transaction costs, powering dApps, and giving real-world utility to SHIB, BONE, and Leash. But when the network itself becomes the story, it distracts from the project's long-term goals and may raise concerns for holders in the future. That's why BONE, the governance token, has taken an even bigger hit than SHIB. Since the exploit, it lost over 40% of its value. Governance tokens are supposed to represent trust in the system, and when that trust cracks, price follows. The exploit was serious, but it was also contained. The attacker is locked out, the funds can't be fully withdrawn, and the developers acted quickly to secure the network. That response and the built-in protections of staking show that Shiba Inu isn't as fragile as some might fear. For now, SHIB holders can take some reassurance that the system held up under pressure. And lastly for today, whales move Ethereum off of exchanges. Ethereum has cooled after months of strong buying pressure and bullish momentum, with the market now entering a consolidation phase. Over recent weeks, Ethereum has traded sideways just below its all-time high, leaving investors uncertain about the short-term outlook. While the lack of follow-through has tempered some of the optimism seen earlier this year, fundamentals suggest that Ethereum's position in the market remains resilient. The sideways action hasn't just been isolated to Ethereum. Most major coins have been stuck within a 5 to 10% range for weeks now. From my perspective, the market is waiting for a catalyst to present itself. It could be anything from an ETF going live after several delays, or it could be that scarcity finally is setting in. But here's what's happening beneath the surface. Large-scale withdrawals from exchanges point to a steady trend of investors moving coins into long-term storage rather than keeping them liquid for trading. According to Look On Chain, a newly created wallet recently withdrew 21,925 Ethereum, valued at $102 million from Kraken. Such activity highlights the growing presence of deep-pocketed buyers who are unfazed by short-term volatility. Over the past few months, the sentiment from institutional investors has been consistent. They want all, yes, all of the Ethereum. When Ethereum leaves exchanges and goes into cold storage, it's not sitting there ready to be sold on the next dip. Liquidity dries up, supply available for trading gets tighter, and over time, that supply squeeze can put upward pressure on price, even if demand stays steady. Remember, Ethereum isn't just a coin, it's the backbone of decentralized finance, NFTs, layer 2 scaling, and more. Every time whales lock away Ethereum, they're not just making a trade, they're making a long-term bet on that entire ecosystem continuing to grow. So yes, Ethereum may look quiet on the charts, but the smart money is stacking while it consolidates. And while whales are moving with confidence, the entire market is still bracing for the Federal Reserve's next decision, a move that could shake every corner of crypto. Definitely a mixed bag of outcomes from today's stories. Shiba Inu took a hit, but the network held up under pressure. Ethereum, meanwhile, is quietly being stacked by whales, while the market waits for the next big catalyst. It's a reminder that crypto isn't just about today's price moves. It's about how these ecosystems respond and evolve when they're tested. Let me know in the comments below. Are you concerned that Ethereum's supply on exchanges is drying up? Or do you see this as the setup for a major breakout? That's going to wrap up today's video. If you found this helpful, please make sure to leave a like. It is one of the easiest ways you can support the channel. And if you're new here, don't forget to subscribe for daily crypto updates. As always, thank you for watching, and I hope you have a fantastic day. I'll see you in the next one.